各位长官、各位现场的贵宾以及线上收看的朋友，大家午安，大家好，我是刘姿玲，欢迎各位呢莅临2025安联人寿经济趋势论坛。Good afternoon, ladies and gentlemen. This is Victoria Liu. I'm the MC for today. I will be helping all the following procedures for today. 今天呢，非常荣幸能够跟大家一起来参加安联人寿经济趋势论坛。其实呢，这是大家非常熟悉的保险大品牌，德国百年金融巨擘安联集团 （Allianz Group）。在这一次呢，其实大家都关注到每年发布的安联全球财富报告。身为集团的重要成员呢，安联人寿不仅专注为客户来提供完整的保障，更凭借着过去专业与远见来掌握世界经济的脉动。这不仅是台湾的寿险市场投资型保单的领导品牌，也更是台湾最大的外资寿险公司。更令人期待的呢，其实从睽违5年之后，我们从去年开始再度的举办经济趋势论坛，而今年呢，安联人寿再一次的延续盛会，而且我们邀请了非常多重量级的贵宾来与会，包含了安联集团在台的事业体共同参加，也充分展现了 One Allianz 的精神。当然，我们也期盼透过这场论坛呢，能够协助所有的贵宾可以提早进入大家的财务规划，来把握未来的经济趋势跟投资的契机。那么今天非常荣幸，安联人寿给予大家这个机会，是再一次掌声，感谢我们的主办单位以及所有的贵宾。今天呢，在论坛开始之前呢，我们要预告活动跟内容是非常的精彩。那当然，我们也非常荣幸邀请到长官跟贵宾来莅临现场。Today, we're very honored to have all the honorable guests here to be with us. And to kick off the forum today, let us welcome Allianz Taiwan Life President and CEO Jos Laurier to the stage to deliver his opening remarks. Let's welcome Jos. 欢迎安联人寿总经理罗伟瑞先生。
Okay, 大家好。
好。
我叫 Jos, okay? Okay. But I don't speak very well Chinese. So if you cannot hear or understand me very well in English, then please put on the headset. Okay, thank you. Mr. Shi Junji, former Prime Minister of Taiwan, Ludovic Subran, Chief Investment Officer and Chief Economist of Allianz Group, Justin Kass, Allianz Income and Growth Fund CIO, Stephen Chang, Managing Director and Portfolio Manager at PIMCO, and dear distinguished members of the Allianz family. And if you're not yet an Allianz client or family member, which we would like to call you, we welcome you after today to join our family. I would also like to welcome our online audience, because this is live streamed, our business partners, our friends of the media here present today, and our colleagues. Good afternoon, and it's my pleasure on behalf of Allianz Taiwan Life to be here and welcome you. Every year, Allianz publishes the Allianz Global Wealth Report. And this year, it was our 16th edition. The Global Wealth Report 2015 offers us leading insights into household wealth and prosperity around the globe. To shed light on the reality of the global economy and its future in a dynamic, rapidly changing world. We host this forum aiming to further share a comprehensive analysis on the growth of the global financial assets of private households and wealth recovery trends worldwide. This is also our first time of inviting Allianz Global Investors and PIMCO to join. With our strong partnerships here in Taiwan, we look forward to deliver a one-stop life asset total solution to our customers in an integrated One Allianz way. We have the privilege today to welcome Ludovic Subran, our Chief Investment and Chief Economist of Allianz Group, and also the Chief Author of the Global wealth report of Allianz in 2025. He is here in Taiwan to share his insights on trends reshaping the global economy. I'm also very happy to welcome Mr. Junji Shi, former Prime Minister of Taiwan, Justin Kass from the Allianz Income and Growth Fund, and Stephen Chang, Managing Director and Portfolio Manager of PIMCO. They will join us, and we hope and we look forward to having productive dialogues. I sincerely hope that everyone will enjoy this forum and have a very, very good time together. Thank you very much, Shesha.
Thanks to Yos. Please remain on stage. We will take a group photo together. So now I would like to invite our honored guests to be on the stage to take a group photo. 接下来我们来进行贵宾的大合照。有请我们安联集团首席投资长经济学家 Ludwig Subhan, Chief Investment Officer and Economist of Allianz Group. 还有我们前行政院副院长施俊吉 ，former Vice Premier of Taiwan， 安联收益成长基金的投资首席 Justin Kass，Allianz Income and Growth Fund CIO， 以及品皓太平洋投资管理公司董事总经理及投资组合经理张冠邦 Stephen Zhang， Managing Director and Portfolio Manager at PIMCO. Okay, we invite all the guests to stand together to take a photo together. Please look at the camera in the front. Cameras in the front, in the middle. Thank you. 好，请各位把握一下时间。好的 ，OK, one thumbs up, please. 好，比一个赞的手势，来祝贺我们今天的趋势论坛圆满成功。好，再请所有的贵宾来看一下后方的摄影机。好的 ，OK, thank you very much, thank you. Please be seated, thank you. 好，再次掌声感谢我们所有与会的贵宾。那今天呢，其实在经济趋势论坛当中呢，我们一共邀请了5位非常重量级的讲者，刚刚大家呢都有看到在台上，我们将进行5场的专题演说跟1场关键的对谈。那当然呢，在刚刚一开始，其实呢，Yos有提到我们2025安联全球财富报告。那第1场的专题演说，我们就要带大家来深入这个内容，分析全球市场的资产配置变化，尤其是在现在高通膨的情况之下，全世界的经济变革非常的迅速，所以呢，在台湾家户资产的消长，我们怎么来观察呢？接下来就让我们掌声来欢迎第1位讲者。Please join me in welcome our first keynote speaker, Ludwig Subhan, Chief Investment Officer and Chief Economist of Allianz. Welcome.
Thank you very much. Can you hear me? Very good. I'm very happy to be here. I will not try even to speak in Chinese because it would be too funny. But I would say that I arrived yesterday and I enjoyed 2 of my favorite Taiwanese delicacies, Din Tai Fung and the foot massage. So I think I'm pretty much in the mood now. And now we can talk business, okay? As an economist, I have to come with slides, otherwise you guys will not take me seriously. I've been given only 20 minutes, but I've been told it's a lot of time because I think the Prime Minister got 15 minutes, so I have to apologize already in advance. But I told them, you know, I have a lot of things to say because the world is very shaky these days. And so I hope I will try to convey the main messages from the Wealth Report, which we publish every year. And I have a good news, by the way. Taiwan is number 5 in the world in net financial assets. So congrats, everybody. You can clap your hands. I have one caveat to that. So I think the Taiwanese per capita net wealth is $162,000. And I know not all of you have that money. So our journey is to make sure you make to that money if you are not there. And if you're above, we make you make even more money. At least that's the commitment that we make at Allianz with our friends from PIMCO and AGI. So the first message I want to say is, unfortunately, the world has to face something called the guy with the orange hair. And so this has a lot of effect on, I would say, the world and especially on wealth. What you see here on the left-hand side is the wealth, global wealth as we see it in our report. It's been going up in 2024 by another 4.5%. And the expectation is that it continues to be on a growth rate between 4 and, a bit more than that, about 6% globally in 2025. But what you can see here, which I think is interesting, is that liabilities are also going up, so debt, and more generally that since COVID, for example, we've seen a slight acceleration of global wealth, even if we had a dip in 2022. The reason why I started with President Trump is because for global wealth, there is something that is happening that is quite interesting, which is the call for home bias. This idea that now a lot of countries and a lot of people, a lot of investors are questioning how safe the dollar is and how safe it is to take risk globally. And if you see on the right-hand side, to date, we haven't seen a massive outflow of interest for the US, but we've seen very specific behavior starting to creep in the way people manage their wealth. In Europe, for example, the return after the depreciation of the dollar by 10% are almost flat on US assets since the beginning of the year. So a lot of investors in Europe have been hedging the US dollar exposure as a result. You've also heard about some central banks in the emerging world getting out of the dollar and getting more into gold. What I think is interesting here is somehow what happened since the beginning of the year, and especially during Liberation Day or around April, has not really materialized in a form of turning our back on the dollar or on the US, right? But of course, this is just something we need to continue watching. Threats to the Fed's independence, new policies in the US. Who would have thought that the US will turn Chinese and start taking shares in the companies like Intel, 15%? Who would have thought about that just 10 years ago? It's a new form of capitalism. Who would have thought also that we would be in a situation where a third, if not 2/3 of the growth in the US is related to one sector and one sector only, AI, right? So what I want to convey here is wealth is on a good trajectory, but there is this risk of fragmentation stemming from uncertainty and geopolitics that we need to keep in mind. And I think the Prime Minister will talk a lot more about geoeconomics in his slot. The second topic I want to talk about is something that is also dear to me. I wanted to show to you that basically people put most of their money in securities, much less in deposits, mostly because of inflation kicking in 21 and after, but also because there is this renewed interest in financial assets. Actually, real assets like real estate or private equity are a bit on the declining side. And this is something that we need to continue thinking. Why is this interest coming back for bond investment, for stock investment? And something that I think is also very interesting is this trend is also very strong in the emerging market. I will offer my explanation to this. 2020, COVID crisis was a big wealth redistributor in many ways. The first thing is, the world stops for several months, and to avoid a big recession, insolvencies, unemployment, a lot of money was put into the system, a lot of money. 10 points of GDP on average per country, and as you know, a lot of debt monetization by central bank. This completely changed the global liquidity of money, which we still see today being absorbed by the system. As a result, a lot of people, and some people call them the Robin Hood generation, especially the young people, got interested into investment. In Germany, where I work, people are now very large buyers of ETF. By the way, that's something that we see also in Taiwan. So there's been this new generation of people that have seen in markets an opportunity to make money and to increase their financial literacy. But it was mostly because we decided to save the economy from recession by injecting a lot of liquidity. The other thing that we saw after COVID, which is still right now very important for wealth and global wealth development, is people are seeing the need to invest a lot more in the tech sector, the services sector, and now the AI sector. So there's been also this idea that maybe you will make less money from your wages in the future and more money from your capital investment. And that also has been a big regime change almost during COVID because people stayed at home and saw the service economy kick in. And then 22, ChatGPT's launch, we see the AI economy being kicked in. And I think this has contributed a lot to the active management that a lot of people in the Northern Hemisphere and the Southern Hemisphere have seen. So really, before and after COVID, a lot of things happened. Third, and I would like to focus on Taiwan. I already gave you a bit the numbers. I think in Taiwan, we see a very large increase in wealth, actually double-digit increase. I just mentioned ETF. ETF now represent 17.6% of investments by Taiwanese households. We see that financial assets are increasing mostly in securities. So there is this financial assets hedge or, interest from Taiwanese families. And of course, there is also a value effect. The stock market, the Taiwanese dollar appreciation, and the role of TSMC and big companies that have been playing a role in this awakening of the market is also a big part of why there is such a strong increase in the financial assets of Taiwanese household. One thing that one needs to keep in mind is Taiwan is also a place where debt is increasing quite fast. So the debt of households is also increasing. In the region, other countries see more increase in debt than in Taiwan. I'm thinking about Malaysia or among others. But what is interesting is as debt increases and leverage increases, risks increases too. And I know Taiwan has this huge ambition to become an asset manager, hub for the future. And I think all of these topics about financial stability, retailization of wealth products, this topic also of how do you manage this equilibrium between higher financial wealth and the need to be invested in the real economy will start kicking in as discussions by policymakers. I want to talk about inflation. It's still a big issue, especially in the US, where inflation look a bit de-anchored, and the very political cut by the Fed is something that is of worry to me. At 3% inflation, the US is running a bit hot right now, and we see that in markets. Everywhere else in the world, we've seen that from 22 onwards, inflation has been eating up a lot of the wealth benefits. It has also pushed a lot of people to get away from deposits and into securities. But there is still, for a lot of people, this idea that inflation is a bit of a wealth eroder. And that's something that needs to be fought against. And you see here some of the numbers on the left-hand side, the difference between real and nominal financial assets per capita growth between 2005 and 2024. In a lot of countries, this has been really halving almost the wealth growth that people could have benefited from. Again, if I take France or Germany, 2/3 of people's wealth is in deposits. So at the banks, so losing money on a daily basis, right? And even after the Ukraine war and the shock of 10% inflation, this behavior didn't change that much. On markets, I think this idea of inflation is still very much there. You've seen gold making a very good year so far. You've seen also the euro appreciate strongly against the dollar because of the differential of inflation and of rates between Europe and the US. So it is something where, this demand for protection in a time of uncertainty and in a time where inflation is still not completely under control, especially in Southeast Asia, where you see second round effects from rents and from some of the sectors where there is still a lot of shortages, I think there will be even more demand for protection in wealth in the coming years, as inflation from AI will kick in before deflation from AI kicks in. As I said before, also because there are frictions in global trade, because there are also frictions in decarbonization, demography, that could be slightly more inflationary than in the past. And so it's very important that people put their savings to productive use with this idea of being protected in cases of downturns, especially linked to a depreciation of real assets. Here, again, you have the number that I give you in introduction. The Taiwanese net financial assets per capita are among the highest in the world, $167,000. It's very high. You are, right after the US, Switzerland, Singapore, and Denmark. So Taiwan is a rich country when you look at per capita wealth, and this is net of liabilities, so net of debt. One thing that you see also on the left-hand side of the chart is when you look at the total asset to GDP ratio, Taiwan is very high, and that's the orange, the light orange bar, and the debt is the dark orange bar. What is interesting here, for me at least, on the total wealth of Taiwanese households and the wealth to GDP, is that it looks quite weird for a country that has so much manufacturing superpower. And I expect this to be rebalancing very strongly over the next few years because there is this growing role and this rebirth of industry. Taiwan has a role to play, clearly has all the capabilities from raw materials to chips to now, the next generation of semiconductors. But it's quite interesting to me, the global, anchor point that is wealth in Taiwan. And again, that I think has been some of the thinking for the government to decide that Taiwan could compete with Hong Kong, with Singapore, with other places, right? No matter the challenges, because there are challenges. Talent and remuneration, geopolitical uncertainty, regulatory environment, and certainly also the idea that to manage the transition to be a global financial hub, this attractiveness is something that is a big issue. If you think about the tax policy in Singapore, or if you think about the anchoring that Switzerland has in Europe, that Hong Kong has for China, or that other financial hubs have for their region, of course, Taiwan has a bit of a different positioning. But again, I think there is this culture and there is this drive that could be quite powerful in the coming years. I just talked about retailization of wealth, so I want to show you two charts that I think are interesting to me. This so-called Robin Hood generation that has been called like that in the US in 2021 is something that Asian youth have been used to. We've seen a lot of young people in Asia being interested and being trading. When you look at crypto assets, for example, after the US, Asia is where most of the crypto boom is coming from. Now it's creeping into Europe slightly. So there's always been this slightly more active, financially literate youth in Asia, mostly because of two reasons. The first one is the mid-90s financial crisis. The youth know what it is to have a de-anchoring of your currency all of a sudden. Most of them have been through it. Their parents have been through it. And the second is because of the very volatile environment. You have to stay tuned almost on a daily basis with the economic realities, right? Which is something that maybe some of the youth outside of Asia have not seen in their recent past. If I think about the Gen Z in the US or the Gen Z in Europe, right? What I want to mention here is wealth is going through massive disruption. One is stable coins that will completely change the world of finance. I really believe that. The fact that we go towards programmatic finance, the fact that now we're going to have a new venue to own dollars and to own US debt. The second is, of course, the fact that President Trump announced this idea of making private debt and private equity much more present in pension funds of American people. As a result, there's been a lot of interest everywhere about these so-called private markets. Private equity, private debt, and how you make them available for people that want to take a bit more of a risky profile, that can tolerate a bit more illiquidity premium, and that can certainly be invested in things that matter for the real economy. So here you have on the right-hand side the performance of these private markets through the past few years with the boom of 21. And now a bit of a trough and a stabilization going forward. It's very important to understand real estate globally is not doing well. It's doing terribly in China. It's doing poorly in Europe, and it's doing not so good in the US. The rest is going through a stabilization phase with a new form of availability of products made to the market. And I think this is for a lot of asset managers globally, this idea of private debt and private equity being pushed also to Asian households is going to be part of the agenda. And we are very fortunate to have two of the leaders in that space with PIMCO, which is very known for its private debt products, and AGI, which has all the suite of products from private equity to private debt and infrastructure equity and debt. So it's also very great, and I'm very happy to see colleagues here, because I think as this world develops in the West, there will be certainly opportunities to push some of these products here, withstanding the regulatory approvals, because these are products that are very complicated and where there are a lot of consumer and investor protection laws. Because I'm on AI, I just want to talk about AI. Taiwan is one of the hearts of AI in the world today. I just found this chart from Mercer on the left-hand side, which is how much AI will disrupt investment management. And you see currently more than 54% of people currently use it, and I would say 41% don't use it but plan to use it. So if you sum it up, it means that only 5% will continue to do investment management without AI. That asks a lot of questions. Of course, hallucination, because we are much more tolerant with our portfolio manager than we are with AI. This is human. This is for the survival of the species. I think we are much more tolerant to people making mistakes than to ChatGPT making mistakes. But more importantly, I think it will ask a lot of questions about how you build value in a world where AI will read the information of companies much faster than you do. Is there alpha, is there performance in active equity mandate going forward? Why do you think the rise of ETF is also questioning a lot of topics? What happens to active investment management? And I think it's very important for Allianz and for the Allianz family to keep on investing in this AI dividend. We've seen it before. The robot advisor didn't really work so well. So there are phases of hype. But I think in investment management, because of the way you can get advice on the construction of your portfolio, there is something that is going to happen. It will be very interesting in terms of financial advice, but also in terms of opportunities. And I will end up with a couple more slides that are important to me. The first one is, I believe, as I said before, that AI will be a wealth accelerator, but also a wealth divider. It's a wealth accelerator. We've seen it in the market so far. This is an AI boom. I don't believe in a bubble, but clearly there are reasons to be worried about how fast it went. I think it is transformative in many aspects. And so the question is, how sustainable is this transformation? When you look at fundamentals, it still looks okay-ish, so not really into bubble territory. But of course, it will depend on what happens next, on electricity, on geopolitics, on regulation, and certainly on the adoption and diffusion of AI by companies. What you have on the right-hand side is, I think, much more important, is as AI grow, there is a question about jobs, and especially job losses or jobs at risk. And therefore, it questions again this idea of value sharing between capital gains and wage gains. If there are more jobs at risk from AI, wage or income coming from wages may be a bit more at risk. And so there is this idea that you need to diversify your income from capital gains very fast and much earlier than before. Starting planning for retirement earlier, starting diversifying from the risks that you may be taking being in an industry or a job, or maybe wage income will be a bit more under duress than your financial income. So I will end with that chart. It's a bit hard to read, but it's the topic of wealth redistribution. I come from a country, France, which has a lot of fiscal issues, and the only answer we have is taxing the rich. We want to take 2% of their wealth. We don't know how we're going to do it, but there is a bit of this polarization growing between the haves and the haves-not. Here you see the national asset concentration. So we looked at the change in the concentration between 2004 and 2024. You see here in China, there's been an increase of the concentration by 15 percentage point additional. So that means the top 10% now represent even, 15 percentage point more than 20 years ago. They now represent more than 90% of the wealth in the country. In Taiwan, this has not moved much, which also shows that, there is some form of embedded, social gains from the wealth that Taiwan has created over the past 20 years, especially through the manufacturing rebirth, the financial industry, the service industry, the tourism, and all the sectors that have been growing in Taiwan. Very important to keep looking at that as wealth continues to be disrupted between North and South, services and manufacturing, young and old. I think this story about social cohesion and finding policies that make sure it works for the majority of people will be even more important than before. Thank you very much for your time, and I leave the floor to the next guest. Thank you.
Thank you very much, Ludovic. Merci beaucoup. 接下来呢，我们要进行的，其实刚刚有讲到安联的2025全球财富报告当中有非常多新的资讯，包含了 AI 以及台湾目前呢在全球的变化。所以呢，其实面对了全球政策，尤其是美国政府的不确定性，现在呢在全球的经济表现跟资产变化，我相信呢也是有非常剧烈的波动。所以要如何接下来准备好我们的产业转型跟投资策略，就是各国政府还有在座的各位需要 要努力的目标。所以接下来呢，我们希望展望2026年，回应全球供应链重组跟市场结构的变化，也包含了我们新兴技术跟绿色转型会带来的成长契机。接着我们就要邀请我们前行政院副院长施俊吉施博士来分享他的观点。欢迎施俊吉博士。
安联人寿罗总经理，安联的各位主管，各位贵宾，各位女士，各位先生，非常荣幸能够在这里做一个演讲。我今天要讲的题目叫地缘经济时代的开启，因为今天的主题是要叫我讲展望2026年全球经济脉动跟挑战。那么2026年的经济脉动跟挑战，最重要的就是地缘经济。下一页。我们可以说，有一个很出名的话，列宁讲的。他说，在人类的历史上，可能数十年都没有变化，但是呢，又可能在数个星期之间，就会发生数十年的变化，那么巨大的巨变。那么，法国有一个历史学家，他曾经说过，人类的历史可以分成3种长度，这种长的可以到1000年才有一次改变，中期的要到几百年，短期的很可能在日历时间之内就会产生改变。各位想想看，今年1月19号川普才上任，今年我们的日历都还没有撕完，这个世界已经完全颠覆了啊！因为美国已经从一个自由主义的国家变成一个国家资本主义的国家了。所以以前大家说中国的逐渐的发展会让它变得越来越像美国，但是我想华尔街现在相信的一句话是，不是中国越来越像美国，而是美国越来越像中国啊。那例如美国呢，现在入股民营企业，对吧 ？Intel 它入股 10%， 那么它持有民营企业的黄金股，比方日本钢铁跟美国钢铁合并之后，它有黄金股。然后他分享民营企业的营收，他说 NVIDIA 到中国大陆去的营收，他要分15%，超微也是一样。然后他指导与规划企业的投资，他跟日本跟韩国要钱，要了9000亿美元，要投资什么？川普说了算数，所以他指导怎么投资。这些东西都是国家资本主义啊，这些东西都不是当年的雷根跟柴契尔夫人所在谈的新自由主义啊。下一页。所以现在的美国的政策大家都晓得，但是我把它简短的摘要在这里，就是对进口品课征关税。美国的关税现在是多高呢？大家大概不太会算，但是我知道一个数字，就是有效关税的税率是 8.9%。名目关税的税率是 18%， 这是从1930年以来最高的关税。它要求外国投资美国，要求外国采购美国商品，那么它也要求企业赴美设厂投资，它甚至要求药厂提高外国的售价，补贴美国药品的售价。川普做过这种事，也做过这个要求。好，下一页。那因此呢，我就把川普这1年来所做的一些事跟目前的状况整理成这一张表。这是欧盟、日本、韩国、台湾跟其他国家的比较。这张表大概就已经把全世界的情况都讲完了。首先呢，列了一个关税。其次呢，赴美设厂，第3个是投资。关税我不谈了。美国有没有要求其他的国家还要到赴美去设立一些特别的产业？有， 他首先呢要孙正义成立一个3000亿美元的叫做美日主权基金，然后他要韩国呢到美国投资设造船厂，这是1500亿美元。台湾已经要了1650亿美元，还有再加上昨天郑丽君告诉大家的，说我们大概要搬一个科学园区去美国。他说这叫做台湾模式。好，这些呢是很特别。然后呢，他也有要求投资，这些投资呢要求日本呢是要5500亿美元，欧盟6000亿，韩国3500亿。那么你算一算，他大概留了一个4500亿的空档要留给台湾啊。这个数字如果是按照这个贸易顺差，就是对美国的贸易顺差，或者美国要承担的贸易逆差来讲，台湾的贸易逆差可能是很高的，非常高，甚至比日本跟韩国都高。另外有种说法说是可能是4000亿美元，但是呢政府没有说，所以我们不晓得。那今天各位早上如果看报纸，或者昨天听郑丽君在讲现在谈判的状况，事实上他是口风一转，说我们跟美国提出的提议是什么，而他并没有提说美国没有要我们去投资多少钱啊，这个是要看清楚跟看到细节。所以我很高兴，我的这个投影片是2个星期以前写的，因为要提早交稿，但直到今天它都还是 work 的啊。下一页，我马上叫各位了。为什么他能够要求欧盟、日本、韩国，甚至台湾要投资，拿钱出来投资美国呢？因为第一个，欧盟需要美国留在北大西洋公约组织，要不然欧盟的军事防卫会松弛，军费会增加。第二，日本需要美国的核子保护伞，跟驻日美军协防中国与俄国的威胁。南韩呢，它是需要美国协助防御北韩。那台湾呢？台湾需要美国阻却中国，防止中国武力犯台。那你看，越南、印尼、马来西亚跟新加坡都没有被要求要拿钱出来投资美国，为什么？因为他们没有需要美国的军事保护嘛。好，所以小结就是这样子。美国也从不讳言，凡是你需要我美军保护的国家，那你就必须拿钱出来投资美国啊。下一页，那欧盟怎么办？他要投资6000亿。各位啊，应该要知道一件事，欧盟是一个松散的组织，这6000亿啊，怎么样分配给各会员国，都是一个很头痛的问题了。还说要投6000亿。第二个，你即便是分配好了，你怎么样去强迫他们真的把钱拿出来？连美国跟他们说，你把这个国防支出提高到3%，西班牙都可以公然说，我绝对不会这么做。好，所以你没有办法要欧盟拿出这些钱来，所以欧盟就很爽快、很痛快的答应6000亿美元，因为他知道你美国也没有办法强行要我做完这件事。那果然美国与欧盟谈完了以后，那这件事就不了了之了。请问各位有没有在听到欧盟要投资美国6000亿美元的事？没有了。所以这个就验证了庄子的一句话，两个人谈完了以后就相忘于江湖，两个都忘记了啊。好，这是欧盟的对策。那日本呢？我们讲下一页。好，日美投资协议公布已经很久了。那你们如果有看过，你也会觉得这个协议的内容是标准的不平等条约啊。简单的讲，它就是说，你这5500亿美元啊，投资了以后，然后呢是由川普指定投什么？投资了以后，这个分润50%对50%。但是如果你日本已经收回成本了，那就变成美国90%，日本10%。是什么样子的 不好意思，恶霸才有办法跟人家1毛钱都不出，分人家50%，最终还要拿90%，所以这个是一个很不公平的一件事情啊。下一页，那日本呢对这5500亿，下一页，日本呢对这5500亿啊，事实上好像原来呢，也就是对这个数字他也就同意了。那同意了以后呢，他当然就有点后悔了。现在的后悔的情况是，下一页啊。那日本怎么解决他的问题？日本有2个优点，这2个优点反而害了这个国家。它的第一个优点就是日币是国际储备货币。日币呢，跟美元、跟英镑、跟欧元，甚至跟瑞士法郎、跟人民币一样，它都是各国中央银行拿它当作储备货币的。所以日元呢，在国际上是有期货交易，也有现货交易，每天都有在交易。好，那日本就可以做一件事啊，它就印日钞，在国际市场上换美钞。所以呢，它可以印钞票换美钞。拿了美元之后，就拿到美国去投资了。好，他事情就解决了。那你说我日币如果印多了，日币难道不会贬值吗？会，有可能。那它贬值了以后怎么办？日本跟美国的联准会签有货币交换协议，叫做 currency swap。因此，日币如果出现了贬值很严重，那么联准会会借它美元。那日本就可以拿美元买日元，再把日元买回来，因此就能够维持日元的价位。如果日元超贬的话，因此日元是国际货币，再加上有 swap， 日本要凑5500亿不困难。好，所以呢，日本他就答应了。但是啊，有个问题，日本要把5500亿就投到美国去。那总要有一个管道投进去。那日本没有主权基金，各位要了解啊，将来有一天如果台湾也同意投1000亿美元就好，那我们政府同意1000亿美元，而且是基赌基，政府对政府，那我们怎么样把钱给美国？你总不能够汇款给美国政府或给美国哪个企业就结束了，不可能。因为政府要支出这个东西，连编预算都不能编进去。好，但是你如果已经成立了一个主权基金，那你就增资主权基金，那主权基金就拿这个钱去投美国的投资，因为主权基金就是要做投资的。所以各位要了解，主权基金是一个很重要的一个 channel 管道，这个管道能够做到一件事，就是有钱。而且有管道注资到美国去，那日本没有主权基金，所以呢，孙正义可能受了日本或者是美国的所托，他要成立一个叫做美日主权基金，它的规模是要3000亿，而且孙正义啊，在今年5月的时候来过台湾，他就见了郑丽君，报纸上就说2个是在谈主权基金。而且孙正义是邀请台湾加入主权基金，还好，我们说要成立主权基金，但是还没成立主权基金。我们也不晓得5月谈了之后结果是怎么样。好，所以日本呢有一个大缺点，没有主权基金，但这个缺点可能会救了它，因为它没有管道可以拿钱出去。下一页，那韩国呢？韩国一样，韩国已经要拿1500亿去帮美国造船了。他还要再投3500亿，投资的方法是按照跟日本的条件是相同的。那很重要的，日本它是国际货币，韩元绝对不是，而且韩元也没有 swap。但是我今天有一个新的消息，各位今天如果看《工商时报》或者是《经济日报》，美国要跟韩国签 swap 的啊，好。那韩国如果没有 swap， 那他就没有办法跟日本一样印韩元换美钞嘛。那韩国要怎么做？他如果真的要拿钱出来，就只有一个办法。 韩国总是还有4000多亿的外汇存底，你硬要我拿钱出来投资美国，那我就卖美国的美债。那我一旦卖美债，这个金额这么大，美债市场会不会有波动？那美国你自己要好好衡量了因为这个金额是很大的。好的，所以韩国有2个缺点，不是国际货币，第二个它没有 swap， 但这2个缺点搞不好是可以救了它。那今天呢，美国帮他完成了抹掉一个缺点，就是他要跟他签 swap 了好，那既然有 swap， 这就能够摆脱李在明所说的，你一定要我拿美金出来，可能会发生重蹈1997年的亚洲金融危机。这是有可能。那现在是不会发生的，因为联准会可以给你美金。下一页。所以南韩讲起来，日韩的规模是不一样的。南韩说他3500亿他付不起，南韩呢，他的外汇存底也比不上日本，日本有1.2兆，所以美国威胁南韩说，如果你不就范，那关税要恢复成为25%，但日本早已经在9月16号就是关税15%了。关税25%跟15%对韩国跟日本这个差异，对韩国是非常致命的。原因是汽车，25%的现代汽车绝对没有办法跟15%的 Toyota 做竞争。当然韩国人已经准备付25%了。李在明说他不准备签这个韩美的贸易协定，因为他签了以后将来一定会被弹劾。而世界的各国人民跟政府都了解，被弹劾的韩国总统有多么凄惨所以等于李在明总统告诉这个世界，我有一个理由，我不能签这个协定我不签这个协定，我有我法律上面的一个正当性。好的，但是这个威胁对美国有没有用？有用。美国在早先的时候去突袭韩国在美国的那一家工厂，去他的 H1B 的那一些签证，他抓了300多个韩国人，那个就是当时我想是 ICE 对韩国在施压。韩国受此辱之后，李在明也说他不会签这个协定了。但是昨天跟今天的新闻又看到了一个新的了，韩国送出了一个新的协议内容送给美国。那他现在不愿意讲他的详细内容是什么，我想他的内容里面应该就会把各方面的问题他都会有一个很好的解决，他提出了另外的条件出来。南韩有不利的地方在于，南韩有一个主权基金它跟日本颠倒的地方，南韩有一个主权基金，所以一旦被强迫了，南韩是有口袋，而主权基金呢，应该把它看成是川普的 ATM 自动提款机。下一页。台湾呢，我们美台投资协议在昨天郑丽君做记者会之前，他上一个记者会有人说听君一席言如听一席言，因为他讲了2个小时什么也没有说出来。但昨天呢是有内容那这个内容还隐藏了许多其他的，就是我们不晓得美国有没有要我们拿钱出来投资，其他的投资我们晓得，那这个金额是多少，他这个是没有讲的。所以我们实情不明，状况不明，我们好像活在多重宇宙里面，我们活在不明的地方。但是有许多政府的财经顾问，他们会经常被咨询，他们是清楚的。所以我曾经写过一篇文章，我说我非常担心内线交易因为属于国师级的财经学者或者财经的这些名嘴，他们很可能会知道详细的情况，所以他们到底要做空还是做多都已经做好了。所以政府很多情报它是不能够藏太久的， 特别是很多人知道的事情。好，所以我们就好像活在多重宇宙，也活在平行宇宙里面。因为我另外也写了一篇文章，看我的脸书会知道，我又写了一个叫做威利郎与抱歉，我连我文章的名字都忘记了。我想到我再告诉各位。下一页。那台湾的对策是什么？第一，台湾不是国际货币，台币不是国际货币。那台湾的 GDP 相对于韩国跟相对于日本也都很少。虽然台湾的这个存底很多，所以呢，台积电已经投资美国1650亿了。那么台湾的对美投资，如果算这1650亿，那是不是已经够了？那另外呢，我们说愿意搬一个科学园区去，那如果这个也算是，那台湾就应该要可以解脱这个难关，2026大概就会过得比较好。所以强迫台湾投资，我们最终也只能够用卖美债来解决问题。卖美债对美国是很不好的啊。下一页。所以现在全世界都在等3件事情：遇到川普，遇到未来的世界，跟明年那3个希望。第一个就是美国最高法院的判决，它可能要到明年的春天，甚至到夏天才有结果。但是美国的最高法院是非常偏保守派的，它是为大家不对它真正寄予厚望了哈。第二个就是人存政举，人走政息，就是希望川普下台了以后，那是不是就解决了？所以川普很聪明，好，他跟日本订了一个条款，说你的5500亿美元要在2029年1月19号以前全部投资完成，要不然关税就提高为25%。那个日期是什么？就是川普任期结束的那一天啊。所以你不要认为拖过川普的任期，这个金额就没事了，不会的。那真正有用的东西是这个字。以前我们都在谈中国加1，现在大家都在谈世界减1，就是减掉美国啊。如果我们的很多人我想在国际上许多经济的名家建议韩国的，就是那你就不要美国那个市场了你不要去忍受3500亿，因为你没有那个本领那你就承受25%的关税吧。世界减1，我想中国也是这么想。所以呢，如果全世界都已经有这样子的一种反弹，那么美国是应该要好好再回去考虑他的这一套政策到底是对还是不对。无论如何，这都是2026年最重要的事情，也是台日韩共同的难关。谢谢各位。
再次感谢施君及副院长。Thanks to former Vice Premier of Taiwan, Dr. Shi. Please be seated. 好，刚刚我们其实了解了全球的脉动跟挑战，那刚好其实副院长有提到了台日韩的比较，接下来我们要贴近市场一点哈，毕竟提到美国，其实我相信还是有很多在座的投资朋友，其实今年看到了这个非常强劲的动能，尤其台湾的股市同样也是如此不断的创高，但是呢，在这个里面我们可能也要观察的是股债的配置跟展望如何来做分配，所以呢，接下来我们要了解到的是关于关税政策走向、利率环境跟资本市场的互动。我们请到的这一位呢，是安联收益成長基金的投資首席 Justin Cass。Let's welcome Justin Cass, Allianz Income and Growth Fund CIO.
I am also frustrated with our president. So, on behalf of somebody from the United States, I apologize to everybody in this room, and I understand your frustration. But I did not fly all the way here to apologize. I came here to talk about the US markets, and I always like to start with a US macro. And When we think about the US macro, and after I talk about the macro, I like to talk about the asset classes that we manage. But when I start with the US macro, I like to remind everybody what the drivers of the US macro environment has been for the past 3 to 4 years. It's been government spending, AI spending, and consumer spending. And outside of those 3 different segments of the market, we've kind of had a rolling recession. And what I mean by that is if we look at the manufacturing sector, it peaked in 2021, and since then it's been on a decline or sideways pattern. Part of Trump's policies is to stimulate the manufacturing, to bring back manufacturing to the US because it's been in a recession. Another area that's been in a recession in the US has been the housing market. Similar to manufacturing, it peaked in 2021, and since then it's been in a decline and really hasn't improved. Part of the reason there's interest rate cuts recently was to help stimulate housing. When we think about the labor market in the US, the labor market has also been softening. Another reason for why the Federal Reserve began cutting interest rates. At the same time, inflation. Inflation has come down. There have been tariffs, so inflation hasn't come down as much as expected. And if we look at the impact of inflation, it's really been on goods and not really on services. Services, which are a bigger driver of the economy, have been in disinflation. When you put slowing job growth, manufacturing, housing recessions, it's an understanding of why the consumer in the US has not been very confident. There are some improvements in the US. Services, which are a big driver of the economy, are beginning to improve. Business confidence in the US is beginning to improve. And part of it is there's more certainty on tariffs. President Trump passed the One Big Beautiful Bill, which is very stimulative for companies to spend money on manufacturing in the US. And that is leading to possible re-acceleration of growth in 2026. So when we think of the fiscal stimulus and we think of the US market, right now it's been held up and buoyed by that government spending. And there hasn't been a lot of private investment. So a lot of the policies, a lot of the fiscal stimulus, a lot of the rationale for rate cuts is to stimulate the economy so it can grow beyond government spending, which is going to slow, AI spending, which will remain very robust, but the consumer, as I showed from that confidence, is also slowing. So when we put that all together, we do anticipate that the US markets, especially from a GDP perspective, will not keep up at these 3% rate that we've seen for the past couple of quarters. But as we get into the middle of 2026, it's our belief that we can see a re-acceleration of growth, largely because of what some of the demands President Trump is putting on other countries to bring back manufacturing to the US. Now, while everybody likes to focus on the macro environment, macro does not drive markets. AI is very unique right now, and the companies that have performed well because of earnings and earnings growth. And what we're beginning to see in the US is a broadening out of earnings acceleration from different companies today. Smaller and medium-sized companies that have been in this recession, they're seeing their earnings bottom, and they're beginning to see an acceleration. In fact, when we look at the US for 2026, The market is expecting double-digit earnings growth. So when you think about the US markets right now, you have a combination of stimulus, accelerating earnings growth, Federal Reserve cutting interest rates. Those are all very powerful combination, and that's what's leading to a higher valuation. There is a lot of debate, and I heard it already when Ludovic spoke about AI bubble. There's comparisons to 1999 and the dot-com boom and bust. This is not 1999. AI is very real, and the companies are very different today from where they were 25 years ago. They're asset light, they're more predictable in their earnings stream, they're less leverage, and more importantly, they generate a tremendous amount of money. And when we look at the market, if we look at it from a price to cash flow, it's a much more reasonable valuation. The other thing that's happening in the US is it's way more than AI. There are a lot of developments and positive things that are happening outside of AI. AI is just topical because everybody knows NVIDIA. However, when we think about power demand, infrastructure build out, grid build out, healthcare innovation, financial deregulation, Bitcoin, stablecoin, there's tremendous amount of drivers that also make it different than where we were in 1999. These trends are very real and very early innings. So yes, the US stock market is expensive, but there's also very unique growth drivers to the US market. When we think about kind of these drivers of the markets of earnings acceleration, growth beyond AI, two of the markets that I'm very focused on in the US are convertible bonds and high yield bonds. In fact, my largest fund, Income and Growth, utilizes 1/3 equities, 1/3 convertible bonds, and 1/3 high yield. High yield bonds and convertible bonds are one of the biggest beneficiaries of the acceleration of earnings and a lot of these themes. Many people do not know about convertible bonds and they're not very familiar with high yield. But convertible bonds is my favorite asset class, and it's very topical and very unique to the Income and Growth strategy. What a convertible bond allows you to do is it allows you to have the downside protection of a bond, meaning you get a coupon and at maturity you get your money back. But if the stock price goes up, you get unlimited upside participation with that. So it's the greatest thing in the world that you have downside protection and unlimited upside participation. And when you put those things together over the long term, convertible bonds give you equity-like returns with a lot less volatility. And I think that's what everybody in this room would love. If I could make just as much money in the stock market but have less volatility, I think all of us would agree that is a great thing. The other thing that is very unique to the convertible bond market, if we think about those themes and trends that I talked about, AI, power development, Bitcoin, healthcare innovation, infrastructure build out, the one market that is funding a lot of that growth right now is the convertible bond market. So there's beginning to have a tremendous amount of new opportunity to invest, and the convertible bond market led growth through the COVID boom in 2020 and 21, and it's leading the AI and infrastructure boom of 2024, 25, and however many years it lasts. The other thing that is very topical in the world that I live in the United States, and again, I apologize on behalf of somebody from the United States, is high yield bonds. We all know there's discussions about high valuation of the equity market. And again, I think if we look at price to cash flow, it's not as expensive. There's a lot of debate about credit spreads and the tightness of credit spreads. But I want to remind investors, when you own a fixed income instrument, the most important thing to you is collecting your coupon and ensuring that the company pays you back at the end. And when you look at the returns of the high yield market over time, it's not about the credit spread, it's about coupon. And the coupon in the US market is moving higher. When we think about credit spreads in the economy, yes, credit spreads, we would all like lower valuations of the stock market, and we would all like wider credit spreads because that allows better returns. However, when you think about the dynamics that I talked about, accelerating earnings growth, fiscal stimulus, improving manufacturing, Federal Reserve cutting interest rates, that is all positive for the US economy. So when we think about credit spreads, they can stay tighter for a longer period of time. Why that is great is because that allows you to collect your coupon, which is the most important thing for fixed income investors. The other thing is, when you have improving fundamentals in the market, like we do in high yield right now, there's very little limit, there's very few maturities because a lot of companies have refinanced their bonds. The default rates are very low. That's another positive development for the high yield market, and why, just like the equity market, credit spreads can stay tight for a longer period of time, and equity valuations can stay higher for a longer period of time. So I just mentioned this, there's been, similar to the convertible bond market, the US high yield market has had a lot of new issuance, and new issuance pushes out maturities, which also causes the default rate to stay lower for longer. So when we think about everything in the US, outside of the politics and the geoeconomic concerns that we face, for US equities, there are very unique drivers of the market that are very positive. And with the Income and Growth Fund, you can capture a lot of these positive development. Valuations in both the high yield market and the equity market will be debated. But there are a tremendous amount of growth opportunities, and with unique asset classes like convertible bonds and high yield bonds, we have the ability to participate in the upside while protecting on the downside, and more importantly, delivering you a high coupon. So I'm honored to be here from the US. Thank you very much for being here, and thank you for everybody for your support over the years.
Thanks to Mr. Katz. Thank you. 好，刚刚讲到了我们呢债市，还有包含了股市的这些展望之外，我们接下来要聚焦的是信用债市的投资展望。那当然呢，其实在这样多变的格局当中，其实 Justin 刚刚有提到哈，因为美国其实还是一个非常不确定性的因素，所以呢，我们接下来要从全球的经济来切入我们债市的最新发展。接下来我们欢迎的这位是品皓太平洋投资管理公司董事总经理暨投资组合经理人张冠邦 ，Managing Director and Portfolio Manager at PIMCO, Stephen Zhang. Welcome.
Thank you. Thank you, Yas, for inviting me to speak. My Allianz One Family colleague for sharing exciting presentations, and also Dr. Shi for talking about many of the geopolitical issues. For my part, I'm going to explain a little bit more into our fixed income outlook and weave into some of the macro concerns that we want to also share in terms of our longer term and also medium term thinking as we position our portfolios at PIMCO. First of all, a few things. One is we spend a lot of time on the top-down approach, figuring out what is going to happen, or at least a framework about what's about to happen over the next 3 to 5 years, what are going to be the key themes, to what are the investment implications about how we set up our portfolios. So a few things that we already have touched on. One is the geopolitical risk, and we call it here the multipolar world. Expect these headlines to keep coming and the policy changes to change the world economy. While we still expect the US dollar and US Treasury to remain very important asset classes and serve as reserve currency, we would expect some diversification away from the US. The second point is that a lot of countries, especially in the developed market, has very high debt levels. And from our standpoint, as fixed income investor, the debt supply is also very important in determining the valuation of fixed income market. So that needs to be taken into account as we price different maturity bonds, and we want to be actively managing around that to get the best income and return. And lastly, about volatility. Given all the policy risk, the geopolitical headlines, expect that to allow many different things to move in ways that you might not have expected before. So what are the investment implications, which is the most important part? One is looking at fixed income. We believe at this point the yield levels are still very high and you should lock it in. This not only gives you the income, but also gives you the hedging characteristics as you pursue a multi-asset type of portfolio. The second part is, as we talk about US having more of a risk than people expect, they might need to diversify away from the US. We want to be able to approach global investment across both developed markets and more emerging markets to collect these opportunities in fixed income. And we will actively manage around it across different sectors and across different countries. So a few charts just to illustrate some of the points here. One is for debt-wise, there are a lot of developed markets that we show here are into very high debt trajectory, not looking very good. If you look at the US alone, they are running about the 7% deficits, probably likely to continue. My colleague has talked about the One Big Beautiful Bill. That's going to add to some of the deficits. They might also pursue tariff and other ways to try to contain some of the debt, but it's not going to really change the bigger picture in terms of the deficits. There are other countries on this list which is also heading in the wrong direction. So what we think is, while we want to lock in some of the yield, you might want to be very cognizant of some of the supply in debt, and we want to go to places where there are not as much in terms of debt supply. The second point about bonds is usually about inflation. On this part, we're actually more positive that inflation is not going to get out of hand. While there are tariffs being put into the system, we think it's more of a level change or one-off effect rather than a long-term higher in terms of inflation impact. So from that standpoint, we're relatively happy about the inflation trajectory going ahead. Now, what that allows is the central bank can be more flexible in cutting rates. As growth, if they were to come down, the central bank would need to do more, and that helps in terms of fixed income allocation and return. And if you look at this chart, we separate out the developed market economies in a darker line, and then the emerging market, which is at a higher and green line. And we believe that the emerging markets, many of them actually have more room to cut rates to help with growth. In fact, some of these countries have very strong balance sheets that would allow more credible changes in terms of the interest rate, even though usually EM might actually fetch a higher yield. We think that situation might actually change for some of these countries. You might hear me talk about the balance sheet quite a lot because we focus on the balance sheet of governments of different countries. We also focus on balance sheet of corporates and other entities, which I'll come back to in terms of the bond valuation. Now, when central bank look at the policy, we we know that they have some kind of neutral rate in mind to see whether the current rate is correct or not. And if we look at the US Fed, we think the right R star after inflation should be about 1%. And that really hasn't changed since the last kind of 5 to 10 years. The inflation rate might change, but R star should stay around 1% type of level. Now, there are other countries that are giving you much higher real rate in terms of their bond market, and we actually want to focus on some of these markets that give you higher than the US in terms of the real rate that you can see from the central bank. One more thing as a kind of like something which I think is quite topical is the US real rate, the theoretical level or the economist model level is about 1%. But we also understand that if you look at the Fed makeup, the members in the FOMC, that might change quite substantially over the course of the next year. And there's been a lot of talk about whether the Fed members will be a lot more aligned with Trump. And if that's the case, Trump would like the actual rate from the Fed to be lower than this natural rate. That might be positive for some of the front-end fixed income instrument in bonds, but not so much for the longer-end bonds. So we want to focus our portfolios also in the more intermediate range of the maturities for bonds, around 5 to 7 years rather than the very long maturity bonds. One thing which I also want to share with you about is at PIMCO, we want to look through many different asset classes within fixed income. And there are a few interesting ones that I want to point out here. We think, first of all, high quality bonds are very good investment to lock in some of the yield now. So the higher quality bonds are the ones on the left that you see in terms of treasuries, in terms of mortgages, and in terms of investment grade corporates. So all of them are giving you 4.5% to 5.5% type return. Within here, mortgages in the US to us is a particularly attractive asset. They have strong balance sheets. At the same time, there's been a little bit of supply and technical selling from the Fed, which give it a little bit of cheapness. Corporate bonds usually yield higher than mortgages, and they are fetching lower yield now compared to mortgages. Now, I think one of the reasons is that the balance sheet has been very strong, and it is a reason for the spread to actually be tight as a result of the government balance sheet being weak in the US. So be mindful about that. So corporate bonds might be still a very good investment despite the yield spread over treasuries being quite tight compared to history. But we think mortgages is an even better and more attractive investment at this point. On the higher yielding side, there are also a lot of different choices that we can take. And I would again point to some of the emerging market currencies and markets, which are giving you quite good yield. And we also see a lot of movement for assets moving into emerging markets. If you look at, again, looking at the US, and maybe people need to apologize for some of the policies, there are people looking for alternative. You can see this very strong performance out of gold. If you like, you can even look at a Bitcoin breaking new highs. And emerging market local currency is actually another one which has posted very high return this year as people seek something different to the US dollar. And in terms of the valuation versus equities, again, we have multi-asset portfolio. We are not negative on equities. But at the same time, we also find fixed income at this point, the yield level is giving you from a historical standpoint better risk reward compared to equities, especially compared to the US. Now, I think there is a couple of messages here. One is you might want to look for markets beyond the US, and also you want to look for, again, more of a balanced portfolio type as you look for some of these investments. And on the corporate side, I mentioned a few things about the balance sheet being strong. That is also evidence within having more upgrades than downgrades, as you might see from the rating agencies. And over the next 6 to 12 months, we expect US companies and global companies to still be quite profitable, and that they will continue to enjoy quite tight spread, even though they might look quite low compared to history. On maybe something else I want to also mention about PIMCO is we spend quite a lot of time on the top-down, and we're quite well known for our top-down views. And for top-down views, we actually use quite a lot of resources to make sure that we are at the leading edge of that. We have a lot of advisors who are having very strong background as part of our global advisory board. We had before the chair being Ben Bernanke, Dr. Ben Bernanke from the Fed, although he has since retired and rolled off our board. We now have the former Prime Minister of UK, Gordon Brown, as our chair. We also have added Janet Yellen onto our global advisory board to help us think through the Fed policies, in addition to having the former vice chair of the FOMC, Richard Clarida, being a full-time staff for us, looking through our global economic analysis. We also have a lot of resources being put into the bottoms-up approach with 80+ credit analysts, and also a lot of people helping us on valuation, looking at models, looking at how AI can add to the fixed income investment through our analytics team. So all of that combined is how we come up with both top-down approach in terms of bottom-up selection from company analysis, and also looking through valuation and models about how we can add value. All of this being done through a very stringent implementation process to make sure every portfolios get managed very well for our clients. And one more slide just on how we do the implementation. While we are very famous for macro, this is kind of more into the thematic part of what we do. Thematic part is where we have tilts in terms of where we favor in terms of countries, where we favor in terms of yield curve, and how we think about duration and other kind of beta allocation. But we also do a lot of things which we call structural. The structural part is where we see persistent cheapness in the market, where we can tilt our portfolios and also enduring kind of advantages of being an active manager in fixed income. So that's something what we call structural, and that's our cheapness. There are non-economic players in the market where they might not be looking for certain things in relative value, and we do. And so a lot of work also goes into the structural as the bedrock for some of our alpha production. And also you see very little bit on top called the opportunistic. Well, it's always kind of like fancy and sexy to trade macro, or when markets move a lot and you can trade in and out. To us, that's only the dislocation that we look temporarily to be there in terms of market making. So we combine these different parts into our implementation, along with how we do top-down, how we do bottoms-up, to arrive at a portfolios that can outperform through many different cycles. And just as a recap about kind of the key messages that we have for fixed income positioning, I think for one, high-quality bonds remain very attractive in our mind, giving you a very good starting yield and income generation, and also providing very good hedging characteristics. Second part is we want to look for global diversification as allocations start to move a little bit away from the US. Coming from quite overweight US with all the exceptionalism over the last few years, that is starting to go into other assets that might diversify from the US risk. And lastly, active management is very important, especially in fixed income world, and we try to do our very best to produce the best return for all our clients. Thank you very much.
Thanks to Stephen for your sharing. 其实上半场的论坛当中呢，大家对于包含了我们全球经济局势、投资契机，以及包含了台湾的财富状况有了非常深入的了解。但接下来我们要探讨这个议题更加重要，因为呢，财富的传承，相信是我们未来保护资产的一个非常重要的主轴。因此呢，我们今天的下半场要用传承无忧台湾社会财富传承策略与解决方案来跟大家分享财富管理跟传承延续的重要性。In the first half of forum, we have covered a lot of global economic trends, investment opportunities, and Taiwan's wealth. But as we know, it's not just about building wealth, it's also about making it last. So in the next session, we will focus to legacy transfer, where we will discuss how to manage your wealth and ensure its continuity to the generations to come. So let us welcome Allianz Taiwan Life President and CEO, Joost Lauritje.
Okay, I hope you had a good break and that you're ready for the next session. I promise I'm not going to show as much numbers and graphs. That's not my thing. I'm very lucky. When I studied, I wanted to be a politician. I wanted to be Prime Minister of my country, the Netherlands. But I did not become Prime Minister. And I heard the Prime Minister say that he had to submit his slides 2 weeks ago. I'm the CEO. I submitted my slides this morning. So it's there's an advantage of being a CEO as well, I think, right? So we're talking about legacy today. Legacy transfer, that's one of our main products in the wealth segment, right? It is about how you transfer your legacy to the next generation. And that is a very interesting topic that I know many of you from our partner HSBC and other partners as well are working on with your clients. And we think it's a very interesting and important subject, and we cater our products rightly towards that. First, I would like to discuss a little bit about Allianz. Allianz is if you're not familiar with that company, it is the #1 insurance brand globally. It is a very large company with a revenue of over 180 billion and a very healthy return on equity of 17% or very close to 17%. We are existing over 135 years, German-based, have close to 130 million customers. And we like to say we are a team of 165,000 people. And you see only a couple of us here today, but I can tell you the rest of us are also pretty cool people. And Allianz, and this is what I like, we talk about investments and opportunities a lot. Allianz invests in their people, and that's what you also see here on stage with the people that came here flying in to meet with you. We like to invest in our people. We had just an employee investor day, which is where we explain the company to our staff and also create that culture of investing in the brand that we believe in. We also invest in our people that we expect our people to keep up to date and keep their academic levels up. So we have a standard requirement of over 45 hours of learning per employee. And yesterday I got an email that for management and senior managers that went up to 60 hours. So I have to have 60 learning hours per year as a standard. And that is something that is unique to Allianz by investing in our people. And we are a pretty good place to work, as you can see here on the right-hand side as well. Here in Taiwan, in the insurance side, we are #4 when it comes to first-year premium. And in unit-linked, we are actually #2 in the market. So we are, by that standards, the largest player in wealth management as in insurance in Taiwan. Allianz Global Investors is the #1 active asset manager here in the country. And PIMCO, as you saw on stage as well today, is the fastest growing based on mutual fund inflow here in the country. So we are very proud of being Allianz and representing Allianz in this market. And we are proud to work with very the best asset manager as well, and PIMCO on the fixed income side as well. And that is also proven in the recognition that we have received. We are recognized for our digital transformation as the best in the country on ASG, the Marketing Initiative of the Year, and so on. I think this year we won about close to 15 awards already in Taiwan. Okay, I consider when it comes to the net financial assets here in the country, Taiwan to be in the Champions League when it comes to net financial assets per capita. We rank now #5 here in Taiwan. And what is even more important, the growth based on last year of net assets per capita, net financial assets per capita is about 9%, which is quite significant when it comes to wealth management and the enhancement of wealth in the country. This is the number of people in Taiwan that have over 100 million NTD of net assets. And you can see in the background there, that is Shilin Market. You see that car that is not so valuable, that car. The boy inside is very valuable, it's my son. Right, that is not my car. So that's my wife's car. No, it's not my wife's car either. No, that was, we were working on that market. My son saw the car. He walked around it many times. He couldn't walk away. And the owner said, okay, do you want to go for a ride? Now, I wouldn't say that in any country, like, okay, take my son for a ride. But in Taiwan, so safe. So I said, okay. So my son went for a ride in that Ferrari with the owner of the Ferrari. And surprise, surprise, 10 minutes later, he was back at the 7-Eleven where we were waiting. But you see here that the wealthy population actually gained by 25% over the past 4 years here in Taiwan. So the household asset allocation in Taiwan, where does it go to? You can see here the majority is in real estate and deposits still, while insurance ranks third with 20%. This I find an important slide. This is to do and with when and how do people actually feel ready and how do they discuss their legacy planning in Taiwan. So we see here that about 52% considers, and this is based on a study done by CTBC and BCG, the consultant, and you see here that about 52% is either, they say they completed their planning and it's in execution, or they said it's completed in planning but not yet in action. And the green parts are no concrete plans or will not even consider or will consider in the next 3 years. So I think what is important for all of us to consider, do we fall in category A or do we fall in category B? And do our clients fall in category A or in category B? And for us to decide, is it category B we want to go for and we want to educate and explain what we can do in terms of legacy planning, or do we focus perhaps on the 23% who has completed their planning but is not acted upon it yet? So the expectations and challenges, we have the legacy givers, the ones with the wealth and the one to hand it over to the next generation. We have some considerations to make, ensuring the children's standard of living, balancing the life plans of their children and concerns about their own fair distribution and harmony in their families. And you have the beneficiaries who need to find how to balance their personal life, also think about tax issues and legal issues, and the sensitivities about discussing this with their elder generation in Taiwan. This is also done via a study of the China Trust Bank together with BCG about what is the ideal age for someone to start discussing it with their older generation. And it came out that the ideal age to discuss that was somewhere around 23 to 40 years old, which I think makes a lot of sense. So, whoa, I need to go back actually. Okay. So on this one, whoop, here we go. So I'm from the Netherlands, and in the Netherlands, my father always told me that the best way to become a millionaire is to do that very slowly. Yeah, and but there are other ways of doing it as well. You know this guy, Bill Gates. He was 18 years in the richest person in the world. Currently, he's number 5 richest person in the world. He decided to give each of his 3 children 10 million euro out of his legacy. 10 million euro each, US dollar, sorry. 10 million US dollar each out of his legacy. And the rest he uses to spend on his charitable activities in education, health, poverty, reducing poverty. And he believes that that is the way to leave his legacy in the world. And that's not to say that in the West we look at that differently than in Asia, because in the West there are many companies as well that have different ways of dealing with legacy and causing different issues in their families or with their legacies. We know the issues with Walmart, with Louis Vuitton, L'Oreal, and how that works. And in our Taiwan, we have our own example with the Evergreen Group, right? With the family Cheng. You know that much better than me, but maybe for our foreign friends, this is one of the biggest conglomerates in Taiwan. The family Cheng owns it, and the father put in his will that he left the conglomerate to his first son of his second marriage, Mr. Chang Kuo Wei, I think is his name. And he And this was challenged by the children of the first wife. A lot of litigation. In the end, it was taken away from that son, and later on litigated again. That son then started a different airline out of the Starlux airline. Later on, it was moved back. So you can see here in the Chinese culture, it's a quite more common practice of transferring legacy to the next generation, but it doesn't always go completely well. And in that sense, we need to have a proper planning around legacy transfers. So the tools and strategies that can be applied are the lifetime giving, the will, a more legal approach, put it in a trust, or the so-called succession planning. And it has its limitations when it comes to the legal procedures, tax issues, etc. So in this, we think there might be one piece missing, and that we consider to be insurance. Right? And as a CEO of the insurance company of Allianz here, I think we all need to think about that. Because we can maximize protection and wealth transfer with insurance solutions. It can simplify the wealth transfer in terms of flexibility in designing or designating beneficiaries. You can change that. The family Chang could have considered that. Of the Evergreen Group. It can increase the capital accumulation over time of the policies. Tax savings can apply. Inheritance tax can be significantly reduced in insurance policies. And you can also create via annuities the caring for yourself at your elderly age, for retirement, living benefits as well. And it can create liquidity, as assets like real estate, they may have value, but they don't necessarily create the liquidity needed in case there's a transfer of wealth to the next generation. So in short, I have two messages for you. The first one has to do with the fact that this was my student job. I repaired houses as a student, but somebody once told me you need to change the roof when the sun is shining. So the right moment to have sometimes difficult discussions and thought processes around your legacy planning are when you're in good health and when the harmony in the family is there. Don't wait for it when difficulties arise in your family. For the second key message that I have, I would like to show you this picture. On the left-hand side, you see a guy. His name is Jack Benny. He was a comedian, an actor in the United States in the 1940s, 1950s of the last century. And he was married with the lady there, and the lady is called Mary Livingston. She was also an actress and also in the United States. And in 1974, Jack Benny died. And the next day, Mary Livingston, she received at her house a red rose, one red rose. And the next day, she got another red rose. And the next day, another one, and another one. And this went on till a certain day in 1983 when she passed away. By then, she had received 3,108 red roses. And what happened is that Jack Benny arranged with his local florist to bring his wife a red rose every single day after his passing, till his wife would pass away. And that's exactly what happened. And what I would like to say about that, and you all to think about, and also when you talk with your clients, is that when we think about legacy planning, think very carefully about what legacy you want to leave behind and how you want people to think about you. And quite often that is by keeping in mind who are your loved ones and who you care for most, just like Jack Benny did. And the second part of this is start with the planning and do the planning and act upon it. That's also exactly what Jack Benny did, because you can plan for and you can do and arrange almost anything with the right partners. Either it is your local florist or it is some party like Allianz. And we would be very glad to be that partner for you. Thank you very much. 谢谢.
Thanks to Yos for your sharing on legacy transfer. 好，刚刚其实看了很多非常生动的案例，好，包含了 Jack Benny 如何在这个跟花店的协商，每天送他的妻子一朵玫瑰。那当然，这就是我们资产规划的传承计划。相信呢，刚刚看到的数字，在台湾只有52%的人准备好，尤其是台湾，哇，接下来还有一半的人，还是有一些犹豫的同时，我们应该要如何来准备，就是非常重要的事情。所以接下来我们要讲，包含了今天我们有5位讲者带来精彩的内容。包含掌握趋势、调整资产配置、成为投资人高度关注的议题之外，接下来我们要进行在台上的呢是一场关键的论坛。我们会邀请的专家共同的剖析来分享呢他们对于未来市场的观察跟建议。那稍后呢这一场论坛当中呢，我们也会邀请到今天呢在与会的4位 keynote speaker 来到台上来进行我们的关键论坛。So ladies and gentlemen, we're going to have our panel discussion on stage. So let us welcome Jos, Ludwig, Justin, and Steven. Welcome. 欢迎我们4位语坛人。Glad to have you here, gentlemen. Though we have a very limited of time, but still we want to elaborate what's your idea from your keynote speech. So the first question, I have a general question to all of you. It's about the geopolitical issue, about the risk, about the big challenges that we are tackling. Okay, so the first question to every one of you, I will start from Yus. Okay, so for the geopolitical risk, rising inflation and shifting monetary policy, actually, we do see a lot of changes nowadays. So how can investors be the info gap to craft a smart, future-ready asset plan?
Yeah, for me, it is. I always consider diversification as the #1 thing you need to keep in mind. And the more risk you see, you need to diversify and not put all your eggs in one basket. I think that is the #1 thing to keep in mind, right? And of course, depending on where the political risks are, do you want to move in that direction or do you move in that direction? And we look at that at Allianz exactly like that. So we look at like where do our customers bring their asset classes, where do they invest in, and should we actually try to also develop products to help them in that diversification strategy. So it's not only it is us as the provider of financial solutions or legacy solutions, but it's also the customer who needs to really know and to see like, okay, and get educated about the fact how you can diversify to spread the risk and reduce the exposure.
Okay, Ludwig. Yeah, okay, thank you.
Yeah, I think the main issue of this year is how also we diversify away from the US. I think you heard the Prime Minister share. There is a concern about the value of the US under the current administration. For me as a European, that means, we have to cater to our own security, increase defense spending. I think the President Lai announced also an increase of defense spending in Taiwan. You have to think about your electricity. When you see China becoming the first electro state, here in this country, a lot of the energy is imported, coal and gas. So I would really also try to think about how you power this country physically. And third, it's the currency, as a European, again, I wonder, there is this Larry Summers famous phrase, which is, he says, there is no alternative to the dollar. Europe is a museum. China is a prison. Japan is a retirement home, and crypto is a scam, right? I would say with what happened this year, we could question a bit what the US looks like. Certainly close to a madhouse. And so as a European, I wonder, I know we won't replace the dollar, but I'm wondering what we can do to take a bit of the crumbs that the dollar is leaving behind its trail, so that the renminbi doesn't take this role, so that gold doesn't take this role. And I would encourage also Taiwanese investors to look at euro bonds, euro as a currency of a safe haven, because of the institutional strength of the country, right? And last but not least, it's about technology. Geopolitics reminds us about how waging a war also means technology. I think Taiwan has amazing advantages. In the supply chain, you're very well positioned. I think going forward, it's going to be about, and it matters to financial markets, right? It's going to be about sharpening this edge, especially in the high bandwidth memory chips, especially in the very niche, I would say, part of raw materials. And I think, yeah, this is fragmentation. So I agree with yours. Diversification is good. But in today's world, it's a very conditional diversification. And so we need to think about it with a grain of salt, which is avoiding home bias, but benefiting of diversification with some safety nets. And these safety belts are the 3 or 4 that I just mentioned.
I think Taiwan does have the power of technology, but also we want to react on how the US government react on the issues and strategies. So I will pass the microphone to Justin, the US representative, to talk about the challenges that we are facing nowadays.
I didn't know if I was talking about the challenges, but to meet goals, obviously you need to think not only diversification, but you need to think long term. A lot of people focus on the short term, and they see trends in the market and they react to trends, and sometimes they get away from their long-term goals. I understand the situation in the US, but I think one thing that I highlighted in my presentation was also with the US, you also come with significant earnings growth. And I know there's significant earnings growth in other regions of the world, but part of that diversification is diversificational regionally, because you get a different earning stream of companies in the US as you do in Taiwan. So I think, just again, if you see a market correction, it's not necessarily run away from the market correction, it's you're diversified, and then you also have long-term goals to where you can add to any correction in the market and take advantage of this noise. Everyone remembers there was a big sell-off in April, and instead of taking advantage of the sell-off in April, most people probably felt like the world was coming to an end and we needed to run from the US market, and that was actually a great time to add to the US market. So again, coming from the US, I know there's a lot of noise coming from our president, but the ultimate goal of the president with everything he's trying to do is to increase some of those sectors where they've lagged and they're in a recessionary environment, and that should help benefit the US in the coming years.
Okay, so we still stay positive. Okay, next, Stephen.
I think, first of all, kind of repeating some of the points that our previous speakers have mentioned, diversification and thinking about long-term objective is very important as we think about these asset allocation. But we're also professional as a manager, so we deal with these uncertainty every day. And what we have always tried to do is to have that long-term view and also a more medium-term view to keep us to see whether the roadmap is still the correct one. And there are different scenarios out there, and we'll be trying to continually assess the probability of each scenario. And we are dealing with a lot more tail risk compared to the past, with policy coming from the US, with some of the announcement on tariffs, which might have exceeded many people's expectation. So we need to prepare for kind of the resilience, like the worst case scenario. You don't want to lose most of your assets on a very bad case. You want to kind of almost like manage it so that there is this resilience in the portfolio. I think there are a couple of other things which we also need to think through in terms of kind of modeling some of these. You have to factor in the political calculation. In the past, there might be a ideal economic modeling that a policymaker should pursue. But right now, there are a lot more kind of politics involved, and on top of that, whether they can credibly push something forward. Just like the Liberation Day, and then some of the people describe Trump as TACO, T-A-C-O, is that he might push something out, and then it doesn't work, he back out of it. So we need to think about all these different paths that might happen. What are the market, in terms of the discipline they might do to some of these politicians. They might not allow some of the things to happen, and when that changes the picture, then the policy might also change. So leave it to the, I like to say, give it to the active manager who can professionally spend a lot of time spending resources looking through these different geopolitical risks.
Okay, I do have a follow-up question for you, because we see the presentation that you mentioned that Taiwan got the 5th ranking in the wealth in the world. So as a Taiwan, as a key player in Asia's wealth, how can it sync with global trends, especially to strike the perfect balance between risk and reward?
Difficult question. I think it relates a little bit to the earlier subject as well. I think first of all, yes. I mean, in Taiwan, there's a lot of money, right? Because you refer to the number 5 list of net financial assets per capita, right?
Yes.
Yeah. So there's quite a bit of wealth here in the country, and that's also on the back of the economy in Taiwan that did so well on the tech sector, right? So there's a lot of people who invested a lot of money here locally in the tech sector, and that's one. And the second part is real estate. So these two sectors did really well in Taiwan. Last year, Taiwan was the best performing stock market in the world. So I think here and this year they're 20% up, right? So it's not the best performing stock market in the world, but it's not bad either, right? It's pretty good. And I think that in that sense, Taiwan is doing really well, but it is also exposed to geopolitical pressures and tension. So that is one. And secondly, it is highly concentrated on that tech sector. So if you add all these things up, then the earlier subject and listening very well, particularly to my professional colleagues next to me, because I'm just a manager of an insurance company, but the investment specialists that's sitting here on the table, what they say about diversification and looking at and listening to and also partnering with professionals who can advise you, I think that would be extremely wise.
Okay, so Ludwig, do you have any ideas to strike the balance between risk and reward, especially for Taiwanese investors?
I mean, not anything that is striking. I just believe that in the current environment, it's important for Taiwanese investors to invest outside of the country for many reasons we could list. While it's also very important to be very patriotic about the investment. And so for me, you have to be strongly value-based investors, trying to get away from passive rent-seeking type of sectors like real estate and get into active growth-building and value-adding sectors. If you believe in doing good with your investment, you should also actively pursue that. Is it because of the decarbonation agenda or the social redistribution, or making sure that you invest in things that resonate with your value? But also, I do believe that there is this idea of, when I say patriotic investment, the government will have to define new directions for, I would say, the industrial policy of this country, and they will be certainly asking for some of these savings to be put to good use. The defense spending is a good example. Defense spending, if it's only the government, it means higher taxes. If it's the private sector, because it's a sector with a strong multiplier, there needs to be a sort of blended finance type of agreement whereby the private sector could be chipping into some of the defense, technologies, power grids, and any of the advanced technologies that defense can provide. So again, I would always try to find a compass that is resonating with you, and I will try to make sure you follow those 2 or 3 advice in the current stress environment, I would say.
Okay, sure.
I would like to briefly add to that, and that I do that because otherwise my colleagues from the insurance side will get upset with me. But of course, insurance, and depending on the product, can also provide a way of diversification in itself, because you go from pure only investment perhaps to also more with some sort of protection with downside risk, right? And that is, for instance, in Taiwan, based on the aspiration of Taiwan to become this asset management hub, there are some liberalization of regulation coming up that we expect in January, and we at Allianz, we planning now to have a new product on the shelf, which is a fixed indexed annuity. That's a product that sells really well in the US. and we are working on that to introduce that. That has some downside protection, clearly, based on indexes. So these kind of products can also, and then you can still, Ludovic, you can still have your investments in indexes that are perhaps not only in Taiwan or overseas. So that gives a lot of flexibility on one side and also some downward protection that might also be considered.
Okay, so Justin, from your point of view, so how can we align with the global trend?
Yeah, I think the most important thing is that you have great global partners that you align with, and let the active management and the managers do their job. And I think you just said it the best, is if you can have strategies that participate on the upside and protect on the downside, that's extremely important. So that's what I would like to add.
Okay, so Stephen, anything to add?
I think a lot of grounds got covered, but from my perspective it's always good to, maybe as a bond manager, you always like to have some income generation, some carry along the way. So while we don't want to be concentrated in any particular field, even though how rosy it might look, having some carry and generation to help cushion you as you kind of take some of the growth-related risk would be a very good combination.
好，接下来我要讲到的是财富传承哈，也就是大家非常在意的内容。So I will move the question to Yus. Yus, you just mentioned Taiwan's wealth is rock solid, but actually high net worth families struggle with succession plans, as we see the diagrams and the figures. So what tips can you offer investors to use insurance and financial tools for tax saving, also passing wealth to the next generation? Just like you mentioned, Mr. Chen, the Evergreen Group, or anything else that they can do?
Yeah, I think the legacy planning, especially when it comes to optimizing the financial side of it in terms of taxes, etc., it is not an easy art, right? It's quite sophisticated. So for that reason, I really think you need very good financial advice. By the time that you are, and there are quite a bit of professionals here in the room as well, especially from our bank partners as well. And I think it's very important to have a very good partner, as was also mentioned by Justin, who can advise you on that. Taxes are always a difficult topic. In Taiwan, inheritance tax is not that high as in some other markets around the world. But still, it needs to be planned really carefully and optimized, if you can do that. And I really recommend people to start early, A, and B, to do it professionally with a professional relationship manager or financial advisor.
Okay, next question we'll move to Ludwig about the latest Allianz Global Wealth Report. 我们接下来要讲到的是安联全球财富报告的内容。当然，我们今年看到了非常多的改变，那甚至呢，其实刚刚也讲到了，从 COVID 开始就有了很多不一样投资的行为模式。So based on the latest report, what big changes are reshaping the global wealth?
Well, I guess I shared most of them, so I won't repeat them. Clearly, geopolitics and frictions, inflation, redistribution, AI, but maybe one that I didn't mention, which is very true elsewhere. You talk about succession planning here, but this generation will certainly be, meaning the young generation, the people below 40, they will be the generation that will inherit the most globally. And so that's going to be very interesting, because we're going to start seeing people that are on the job market and they realize that they don't need to work anymore, because what they're going to make from their job is less than what their parents are going to leave them when they pass away. We're going to have issues regarding succession between different heirs and how some of them will be successful in managing it and some of them will not be successful. We have also this entrepreneurial wealth that was created from AI and from the technology boom. And again, these are people that are new in the world of investments that sometimes fall into the cracks of behavioral biases. So when we call them nouveau riches in French, right? So the new rich, they're often terrible investors. The best example is, of course, Donald Trump, right? Had he invested the money that his father left to him in the SP 500, he will be several times a billionaire. And he's only becoming a billionaire now because he's issuing meme coin out of the White Office, the White House, yeah? So that tells you a lot about, this fact that this generation is going to be slightly wealthier. What are they going to do with it is a big question, and I hope that they get good financial advice. Second point and last point is women. A lot of these heirs are going to be heiresses, and women are usually looked away from their financial advisors. especially banks. I don't think it's true for insurance. And when I see this room, I see a lot of women. But in the world of finance, usually you talk to men, and women realize about the wealth when their husband passed away, when there is a divorce, or when there is a problem. Yeah? So my advice is also for women to get empowered, to get financial advice, to get club deals, to talk to other women, and to leverage this power towards people like PIMCO and AGI, yeah? Because then there's a bit of missing women on the stage. You're a wonderful one. But I think in finance, we need also to show role modeling.
Okay, so I do have a follow-up question for you, Ludwig, because I think most investors, they want to know where to put their money, especially with the global tension. And also we see the shifting interest rates. We have a prediction that maybe in November, we'll cut the interest rate from the US, and the green push, that's a trend. So do we have the plan across the regions?
I mean, our allocation right now, I mean, we manage 800 billion, and we're an institutional investor, long-term investor. We like the belly of the curve, so the 5-year or around, including in the US. We don't necessarily like the longer end of the curve because of the inflation, the incurring risks. We like European bonds, govie bonds. I like the French bonds, even though everybody says we're going to default, including my own CEO. I think it's a great value for money. I don't like corporate bonds very much for spreads being too tight reasons, but I'm with Justin. If you want a coupon, you should have corporate bonds. It's a good place to be. And of course, we also are a very big investors in private markets, private equity, real estate, and private debt. There is tons of development in the private debt market, so I encourage all of you to get interested in that. It looks sometimes a bit fishy, especially the asset-backed finance, but it is something where we're very positive because of the development. A lot of corporates, especially the mid-market lending, are going to investors instead of going to banks, because banks are a bit riddled with their regulatory capital requirements. So I would say for the rest of the year, the tactical allocation is a bit more risk on than the past 3 months, for example. But still, I would still prefer convertibles over write-out stocks because of the bubble. And I would also be, to be fair, very positive emerging markets, because the Fed cuts is a push towards liquidity globally. And I would say the emerging market central banks have a lot of room right now, and they are countries that are doing extremely well. So I would be quite positive also for emerging markets, especially the stronger ones, right? So it's, I would say, yeah, slightly better or more risk adding than I would say the past 9 months, where people were very worried about volatility. This being said, medium term, we are still very cautious in our allocation, but it's mostly because we're an insurance company. The last thing I wanted to say is also check your portfolio construction with a specialist, because correlations have changed a lot over the past 2 to 3 years. So everybody is focusing on gold. Right now, it's very fascinating to me because I don't know, I think gold is for weddings. So each time people is like, oh, gold has been the best performing asset. But the reason why it's been performing is because of this protection need, but also the fact that it's not correlated anymore with the global liquidity. And so that's something that people have a tendency to forget, right? So I would really look into this because there are non-linearities everywhere. And this, because of the amount of money into the system right now, will keep on changing. So you need to frequently reappraise, I would say, the way you are exposed, right? I mentioned something before. If you're exposed, or Justin actually said it also, if you're exposed to the US right now, you're not exposed to the US, you're exposed to AI, if you're in the equity market US, because 80% of the performance is coming from AI, right? So do you want to be that exposed? If you're on TSMC chair and SP 500, you're double exposed to AI. So if AI bubble were to prick, you are double affected, yeah? So that's the type of thinking that I think would need to be a lot more in the discussions with your financial advisors.
好，不管是金价或是 AI 的观念提供给各位，当然呢，新兴市场还是有非常强劲的成长动能，也是大家可以参考的方向。那接下来我们要讲的是收益成长的资产。I will have the question to Justin. Okay, global stocks face high interest rates and slow growth, so making income asset hot topics. So for investors, how can we balance dividend growth, sector shifts, or risk over the next year, especially next year? Trump is still alive.
I thought this was a very funny question, and I don't take it as because that is what income and growth does. It gives you dividend income risk management, and the ability through active management to sector rotate. So first, you can just buy income and growth. But I think from an investor standpoint, it's a lot of what we've already covered. It's very important to have diversification. You can see there's plenty of great opinions of different managers of asset classes that can participate, protect. And I think that's really unique of why you need insurance, why you need a professional to help manage this. But income is extremely important. Downside protection is extremely important. And again, if you're diversified and you stick to your long-term goals, then I think everything will work out. And again, the question is focused on a very narrow, specific is next year. And we need to think that Trump's elected for 4 years, and the US market has been through multiple cycles. Global markets have been through multiple cycles, so always keep that in mind. 1 year is a very short time period.
Thank you very much. Okay, Stephen, I'll have the question to you. 我们接下来要讲的是 fixed income asset， 跟债券有关的。After years of low interest rate and fixed income assets are back in demand, as we see, a lot of investors are involved with the fixed income assets. So with uneven global rate policies and market swings, how should investors weigh emerging versus developed bonds?
Yeah, I mentioned a little bit about the emerging markets during my remarks earlier. But one thing I think as stepping back for fixed income in general, a key metric that we look at is the real yield that you get from fixed income instrument. For a while, especially during COVID, when central banks were all cutting rates, there were like all different kinds of very low yield or even negative yield in many different key developed market, bond market. At the time, not only is the real yield negative, but the absolute yield is negative. You get less money back compared to what you put in. But what we see today is a lot of positive real yield. So you get compensated not only positively, but also positive in addition to the inflation that you're experiencing. I mentioned about the US, our star or natural rate of interest that might be considered more neutral, but give or take, it's about plus 1% on real yield. For emerging markets, we find that there are many markets that give a real yield higher than that. Partly because it is the label of being previously emerging market, and they got grouped into different category, and they have an inherent kind of lack of subscription by others. So with some of these markets, we find better health, better balance sheets than some of the developed markets, and you can get anywhere from 2.5% to 3.5% yield in like of Mexico or Hungary or Peru. Now, these might not be markets you think of as developed market, but the health is actually very good. And if you have comparable health, like some of the fiscal deficits that we see in the US, and there are some emerging markets that give you +6%, +8% in terms of real yield, which we want to have a diversified exposure to, which also added to the income generation and keep the diversification concept alive.
Okay, due to the time limit, we still have one final question to Stephen. So Stephen, so what is the trade-off between cash flow and steady returns?
I think the two kind of comes hand in hand together. We like to have both where we can, but we need to think about, again, the volatility over the cycle for any instrument. But having some of the income being paid out with the generation of the cash flow that can pay and reduce some of the credit risk along the way, we think that's actually would be a good combination.
Okay, thank you very much. I think time is up. Thank you very much, gentlemen. 再次掌声，感谢我们所有的语坛人。Use Ludovic, Justin 跟 Stephen， 谢谢。Please be seated. Thank you. Please go back to your seat. Thank you. 今天呢，我们的论坛呢相当的精彩，那大家也分享了非常多不一样的观点，希望大家呢都是收获满满，可以带回呢很多的这个知识跟未来投资的方向。那接下来呢，我要请大家聚焦一下，在我们呢会场两边的荧幕上有一个 QR code， 请大家呢扫描这个 QR code 来填写我们的活动满意度问卷调查，稍后呢，您完成之后，在我们的工作人员前台出示，就可以得到我们今天的赠礼，包含了餐盒，还有《今周刊》1本。再次的感谢大家的参与，同时也容许我们再次提醒您，如果你今天是开车过来的话，稍后我们的工作人员会在前台进行停车的消磁折抵，再麻烦大家。同时，今天有非常重要的，您的证件来换取口译设备，要麻烦每一位将口译的器材 台归还到前方的服务台，才能将您的证件领回去。同时也要提醒大家，在会场内的随身物品不要忘了带走。那也非常感谢大家对于今天论坛的参与，希望大家有个愉快的一天，我们下次再会。